Well, it's a key trading day this Friday morning. We're closing out the second quarter and the first half of 2023. All three major indices are on track to log gains for both period. But as you can see, the Nasdaq blew the other indexes out of the water, up just about 30% year to date. Few strategists have predicted the market's strength in the first half of the year, and even fewer have predicted how narrow the rally would be. So let's break down what happened so far this year. And even as you're taking a look at some of the major averages this morning out of the gate, of course, Julie, this comes with the added context here of what we've seen for the Dow, the S&P 500, and the Nasdaq. We've got that loaded up on screen here for our folks at home as we slide on over to the Wi-Fi interactive here.
It occurs to me we don't have the percentages up here. But luckily, I know them.
Hey.
Yeah, here we go. The Nasdaq is up about 30% on the year to date. The Nasdaq composite, that is. The S&P 500 is up, around 14.5%. And the Dow is up less than 3% on the year. So that really shows the real divergence that we have seen. And it's shown the theme that we've talked so much about, that it is large cap tech that has really dragged the rest of the market along. But we haven't seen that broad participation. If we look at the Nasdaq 100's return for the year to date, that even more concentrated bunch of stocks, you have the same situation. So the Nasdaq 100 up even more, about 36% for the year to date.
And this comes off of a year in 2022 where the mighty had fallen. Those mega cap tech stocks had taken a blunder, especially given the Fed's very hawkish and rapid pace of tightening. And so as we continue to move through what is now a decelerating period in the Fed's tightening and policy pathway, there is still more work to be done, as the Fed had shown earlier this week. There's a few other areas where the Fed has impacted. The Fed's impacted yields as well over the course of this year. And it's been interesting to see exactly where investors have placed a lot of their own, perhaps portfolio plays, based on where the Fed would continue to be more hawkish around their yields. We're taking a look at some of the 10-year T-note yields, and over the course of this year, I mean, you can exactly see, given where the Fed has shown the inclination to have a terminal rate as well and set that and give the market some expectations, even though there's been some of the conversation about which is wagging which, whether it's the Fed wagging the markets or the markets wagging the Fed. There's still a very clear tenor that had really transpired within the yield progress we'd seen over the course of this year.
Yeah, but when all is said and done, the yields have moved surprisingly little. I mean, yes, there was a lot of movement in between, but at the end of the day, where we started the year and where we are now is not that different when it comes to yields. We do have some strategists now changing their strategies on yields. JP Morgan, for example, pulling back on a short-term bullish tactical call that they had on 10-year treasuries, which is interesting. So we definitely see people repositioning into the second half of the year. But to dig into what we have seen sector-wise and stock-wise, we want to take a look at the Wi-Fi Interactive as well to look at what we have seen. So just want to quickly hop on over to our heat maps here. Let's start with the Nasdaq 100, why don't we, and look at the year-to-date, because again, this puts a fine point on what we were discussing, which is the vast dominance of large cap tech, which is kind of in your quadrant, if you will, Brad.
Yeah, and so focusing in on this quadrant, and if you were to highlight a few of the players and what they have discussed that's really given them a lot of fanfare, or at least pushed investors in their direction, think about NVIDIA here. Seeing that up year to date, up by about 180%. Now, that's the intraday move here, but year to date, there you're taking a look at that move, and much of the conversation there has really centered around generative AI. You think about some of the other companies that have benefited from that as well. Microsoft was one of those. Even though that's up only about 40%, it's still a significant move, but compared to some of the rest of the mega cap tech stocks here on the year, there have been considerable moves in NVIDIA, Tesla, even as some out there on the street, some analysts try to annex an AI play there. We'll see if that proves out. And then Meta as well, as they try to figure out what their generative AI play is while dampening down the spending that they had done on the metaverse as well.
Right, exactly. So just domination by large cap tech. Real quick, want to look at the sectors for the year to date as well. Utilities, energy has really gotten beaten up this year. Healthcare as well. And then predictably, you've got XLK, tech, XLC, communication services, XLY, consumer discretionary, that are the best performers this year. So given all of that, given what we've seen in markets, we also want to take a beat and talk about the economic outlook and what has driven gains in the first half of the year.